Let us now discuss the paying taxes indicator, and we will look on the significance of this area for the businesses and the scope of coverage of the indicator. Then we'll consider the main findings and the good practices of the Doing Business 2019 report, and we'll look at the results of Azerbaijan on the indicator. Why is taxes? Why is paying taxes matter, and why is tax administration important? Taxes are considered the price that we pay for a stable and more equitable society, and funding social programs and public investments. They're key to effective and efficient government. But tax rates and burdensome tax administration remain the top obstacles for businesses around the world. And the challenges are mainly associated with choosing the level of tax rates and tax base, designing the tax compliance system that encourages taxpayer participation. Tax administration and tax rates are considered less of a obstacle and problem in countries that rank better on paying taxes indicator. And so firms and economies that score better on ease of paying taxes tend to perceive both tax rates and tax administration as less problematic experience and practice. So why is it important to cover post-filing processes as well? Up until the Doing Business 2017, the paying taxes indicator set measured only the cost of compliance with tax obligations up until the filing of tax returns and payment of taxes due. However, filing the tax return with the tax authority does not imply agreement with the final tax liability. This is why post-filing processes such as claiming VAT refund or undergoing tax audit can be most challenging and hindering interactions that the businesses may face. For instance, VAT refunds, according to tax policy guidelines of OECD, a value-added tax system should be neutral and efficient, and when businesses incur VAT, which is not refunded at all, or claimed with delays and large compliance costs, then the principles of neutrality and efficiency are undermined and hindered. So essentially, when input VAT exceeds output VAT, the amount should be paid as a refund to a registered business within the reasonable period of time. And as concerns the tax audits, it is considered one of the most sensitive interactions between the taxpayer and tax authority, and it is crucial that right legal framework exists which ensures integrity in a way tax authorities carry out audits. And for the purpose of the Doing Business research, the tax audit is defined as any interaction between taxpayer and the tax authority, post-filing of the tax return, and payment of the tax liability due, including informal inquiries, formal inquiries, and formal tax audits. So the scope of indicator includes the following components. First of all, there is total tax and contribution rate, which is measured as a percentage of profit before all taxes. And then there is number of payments. Then there is a time, which is measured in hours, and the efficiency of post-filing processes. And in terms of case study,
we're sorry.
Little break.
Yes, then I'm gonna get up. Consider
a limited liability taxable company, And it is in the second year of operation, from 1st of January 2017 to 31st of December 2017. It operates in the country's largest business city, and it is 100% domestically owned. It has 60 employees, out of which there are 4 managers, 8 assistants, and 48 workers. The company performs general industrial or commercial activities, and it does not participate in export or import operations. It has a turnover of 1,050 times income per capita. So now let us look at the total tax and contribution rate. As I mentioned earlier, it is measured as a percentage of commercial profits, and it measures the amount of taxes and mandatory contributions borne in the second year of operations. Categories of included taxes involve profit or corporate income tax, social contributions and labor taxes, property taxes, turnover taxes, and other taxes including municipal fees and vehicle taxes. And how is it measured? Only the taxes that imply direct cost to the company, or sum of all taxes and contributions payable after accounting for deductions and exemptions. The total tax rate differs from statutory tax rate, which merely provides the factor to be applied to the tax base. A share of commercial profit in computing the total tax rate is the actual tax payable divided by the commercial profit. And the number of payments is another component of the indicator, and it measures the total number of taxes and contributions paid, the method of filing and payment, the frequency of filing and payment, number of agencies involved is all recorded under the indicator. And the tax types involve tax paid directly by the company, corporate income tax, property tax, and as well as taxes withheld by the company, employee-borne labor taxes, as well as VAT. Electronic filing is also taken into account, electronic system for filing and payment when these are used by majority of taxpayers, and no follow-up with submitting physical copies are required. This is counted as one even if the actual interactions are more frequent. And joint payment, when there are 2 or more taxes and contributions filed for and paid jointly using the same form. In such cases, these joint payments will be counted as one. Another component is time, which is measured in hours, and the indicator measures the time spent on corporate income tax, value-added tax, and labor taxes. So, for instance, for corporate income tax, it would be the preparation time to gather all information necessary to complete the tax return and compute the tax payable. And then there would be filing time, which will involve the time to complete all necessary tax return forms and formalities with the tax authorities. And the payment time per se, time that we need to make the payment online or at the bank or at the tax authorities, depending on what is applicable here. And the same exact time measurements would apply for value-added tax and the labor tax. And what is included in the post-filing index? The time to comply with VAT refund and time to obtain the VAT refund. And another part is the CIT correction, corporate income tax correction. And here we measure time to complete a CIT correction and time to comply with CIT correction. And the case scenario that we consider for post-filing index was introduced in Doing Business 2017, And there we added such assumptions that that the input VAT exceed output VAT as a result of a large capital purchase that was carried out by our company. And this triggered the case study company to request VAT cash refund. And a situation where a taxpayer has committed an error in the calculation of the corporate income tax, and he or she voluntarily requests to amend the tax return. So these two cases are considered for the purposes of the post-filing index. And so let us look at more details of the VAT refund. As I mentioned, we will measure the time to comply with VAT refund and time to obtain the VAT refund. For the time to comply, it would involve the time required to gather information and calculate the VAT refund, time required to prepare VAT refund claim, and any additional documents that are necessary to support the claim, as well as time spent making representation at the tax office if these are required, and the time to comply with audit is included if companies with request of VAT are going to be subject to audit review in more than 50% of cases. So in such cases, the time to comply with an audit would be recorded, time spent gathering information and providing supporting documents by the tax auditor, required by the tax auditor, would be also captured by the indicator. And the type of audit interaction is taken into account too, whether it is a single issue audit or a comprehensive audit. And in terms of time to obtain VAT refund as such, it is the time in weeks to receive a cash VAT refund from the moment the request has been submitted, and it includes delays due to waiting for an audit to be finalized by the authorities. If an economy does not have a VAT, or the purchase of machine is not subject to VAT, the economy will not be scored on the two components under the VAT refund process, so they will not be there. And if the economy has VAT, but the eligibility to claim VAT is restricted to specific categories of taxpayers, let's say, or if the case study company is eligible to claim refund, but cash refunds do not occur in practice, or if there is no refund mechanism in place, the economy is assigned a score of 0 as well. The legislation mandates that taxpayers carry forward the excess input tax for 4 months or more before a cash refund can be requested. The economy also scores 0 on this particular component. And now let us consider the details of corporate income tax correction. Again, there are two components: time to comply with the corporate income tax correction and time to obtain to complete the corporate income tax correction. And in terms of time to comply, it would involve time required to gather information and prepare documents to notify the authorities of the error, submit the amended tax return, and any additional documents that are required, and time to make the additional payment. And what are the cases in which the tax audit is included? In economies where the majority of respondents confirm that in 25% or more of the companies with amended corporate income tax returns are pulled into additional review, and the additional review could refer to informal inquiry, formal inquiry, as well as formal tax audit, including correspondence audit, field audit, or an audit at the tax office. And the time required to gather and prepare any documentation requested by the auditor, and time to submit these documents for cases where the company is subject to this additional review. In terms of the time to complete the corporate income tax correction, the indicator measures the time for the tax audit to start and time spent interacting with the auditor from the moment an audit begins until there are no further interactions between the auditor and the taxpayer. And in addition to that, the time spent waiting for the tax auditor to issue the final tax assessment is included as well. For countries which do not levy corporate income tax, these two components are not scored as a part of post-filing index. So currently the frontier on paying taxes is such that on payments, the frontier is three payments, and this can be observed in Hong Kong, China, and Saudi Arabia. The frontier on time is 49 hours, and this can be seen in Singapore. The total tax and contribution rate of 26.1% is the best performance in Ireland and Cyprus. And the post-filing index of 100, score of 100, is not observed in any country yet. And what is not measured by the indicator? Taxation in special economic zones. Tax incentives based on criteria other than age or size of the company. Products subject to special tax regime, for instance, liquor or tobacco. Tariffs and other customs duties, and taxes and duties on international transactions are not included in the indicator. And let us look at the main findings of the Doing Business 2019 report. And we check where it is easiest to pay taxes in 2017. And as we can see, Hong Kong leads the group of countries with a score of 99.71. And the countries come from different regions in the top 10 performers. And in terms of reforms that were observed in the Doing Business 2019 report, they were conducted in various areas, and these include introducing or enhancing electronic system that was observed inter alia in Azerbaijan and Bahamas and Bhutan and China, among others. And another area was reduced profit tax rate, which out for more tax-deductible expenses and made changes to tax depreciation rules. These countries include Ecuador, France, Georgia, among others. And reduced labor tax and mandatory contribution is another area. And for instance, Vietnam reduced the employer's contribution to the labor fund from 1 to 0.5%. Another area is introducing new or significantly revised tax law or tax code, which was observed in Georgia and India. Simplifying tax compliance processes or decreased number of tax filings is another area of reform. And again, Azerbaijan is among the countries that implemented such a reform. Other countries involve Georgia, India, Kenya, Kosovo. Merging or elimination of taxes was done in China, Cyprus, Ecuador. And improved VAT refund processes was observed in Egypt, Iran, and Kosovo, among other countries. And finally, improved tax audit and correction of corporate income tax return processes, which was done in Azerbaijan, Iran, Kosovo, and Mauritius. So as you can see, the types of reforms vary, and countries from all over the world implement the reforms in various areas, and some countries implement reforms in several of these areas of paying taxes indicator. So one of the top improvers in paying taxes in 2019 is Mauritius, and the country introduced an expedited processing system for the repayment of VAT refunds, upgraded its online platform for VAT return submissions to allow for invoices to be submitted electronically, and allow electronically to amend the corporate income tax return. And this improved the paying taxes score of Mauritius from 90.85 to 93.5, from Doing Business 2018 to Doing Business 2019. And economies eased tax compliance on businesses through online systems in 2017. And we can see here the top 10 economies that improved the most. They improved their score and time to comply with the 3 major taxes in the Doing Business 2019. And these are Iran, China, Cote d'Ivoire, Togo, Argentina, Georgia, Turkey, Azerbaijan, Bahamas, and Thailand. And now let us look at the good practices in paying taxes indicator. And the global good practices include use of digital technology at the tax authorities in order for filing of tax return, payment of taxes, pre-filing tax return, automatic matching VAT data between suppliers and buyers, online case management and audit. Another good practice is keeping it simple, one tax base, one tax, including merging taxes with the same tax base. Risk-based system is another area that is considered a good international practice. And based on risk profile, the companies are selected for audit. Performance and supervision framework of tax audit is another good practice. And now let us look at the results for Azerbaijan on the paying taxes indicator. As you can see, in Azerbaijan it is required 6 payments per year, and total time is 159 hours per year, whereas total tax and contribution rate is 40.8% of profit. And on the post-filing index, the country scores 83.79. And here you can see the list of taxes that are currently recorded for Azerbaijan, and I will not go through all of them, but if you have specific questions, we can check that later. And in terms of post-filing index, as you can see, the country scores 83.79 points on the index, and we, according to our data, there is VAT, the value-added tax exists, and the VAT refund process would apply for our case study, and the carry-forward period would be for 3 months. And in terms of corporate income tax audits, again, they would exist, and the percentage of cases exposed to corporate income tax audit would be from 0 to 24%, according to our current data. And time to comply with corporate income tax correction would be 3 hours, and the time to complete a corporate income tax correction would not be applicable in our case study. And a number of tax payments across the different economies you can see on this slide. And as you notice, Azerbaijan has only 6 payments, whereas other comparator economies from the region have Russia has 7, Poland has 7, and Kazakhstan has also 7, whereas Romania and Bulgaria have 14, and regional average is a little over 16. In time, on the time component, Azerbaijan is also below the regional average. By below, I mean the time is lower than the regional average, and it is on par with the OECD regional average. For the total tax and contribution rate, it is a little 40% of profits, and it is a little higher than the regional average, and it is approximately on par with the OECD regional average. And the final component, the post-filing index, as you can see, Azerbaijan scores over 80, and this is similar to OECD score, average OECD score, whereas other countries from the Europe and Central Asia region score a little less, and regional average is a little over 60. So we can walk through the reforms that took place over the years, and we start from Doing Business 2008, when an online filing and payment system was introduced. The following year, the extension of online payment and filing system was done, and introduction on advanced accounting software. And in Doing Business 2011, lowering several taxes, simplification in CIT and VAT payments was carried out. And the Doing Business 15 saw introduction of online electronic system for filing and payment of social security contribution, whereas the Doing Business 2017 saw vehicle tax for residents being abolished. And the final reform took place last year, last edition of the Doing Business report, when Azerbaijan made paying taxes easier by introducing electronic invoicing and unified tax return for social security contributions, and enhancing the online platform for filing corporate income tax.